this one because right now we are seeing multiple shifts happening at the same time across macro, across geopolitics, AI, and crypto. And when all of these start moving together, that's when markets gets very interesting. So let me start with this. The market looks stable on the surface, but underneath pressure is building. We have rising geopolitical risk. We have uncertainty around the Fed. We have shifts in AI infrastructure, and we are starting to see cracks inside crypto itself. So today, we are not just looking at headlines, we are connecting the dots. First, we go straight into geopolitics because US and Iran talks have collapsed, and that is, of course, a big deal. We are seeing a potential blockade in the Strait of Hormuz, being one of the most important oil routes in the world. That means energy prices could move even higher from here. And when oil moves, inflation moves. And when inflation moves, the Fed, of course, would react. So this is not just a political story. This is a market moving story. Then we'll bring it back to Bitcoin because despite all of this, some analysts are calling for a move to 88K per Bitcoin. They are pointing to ETF inflows, institutional buying, and technical signals. But here's where it gets very interesting. I do not buy any of that. I think we may have seen, we still haven't seen the cycle bottom yet. So we're going to break down both sides, the bullish side, and of course, the risk the market may be ignoring. After that, we'll move into DeFi because one of the biggest protocols in the space, being Aave, is now facing some very serious internal crisis. Key teams are leaving, risk management is changing, and governance is being questioned. No hack involved, actually, no exploit, just some internal breakdown. And sometimes that's even more dangerous. Then we zoom out to regulation. Hong Kong has officially launched a stablecoin era. The first licenses are out, but here's the twist. The first winner are not crypto native players, they are traditional financial institutions. So we're going to break down what that means for the future for Web3 and whether crypto is really being integrated or just being controlled. And then we go into AI because a new major model, DeepSeek version 4, is about to launch. This could be a serious competitor to Western AI models, being cheaper, more efficient, and possibly open source. And at the same time, there's a new bottleneck in AI that most people are missing. It's no longer just about GPUs. Now, CPUs are becoming the limiting factor, and that changes the entire AI races being played. So if you want to understand where markets are heading next, what risks are building under the surface, and which narratives actually matter right now, you need to stay with us because today's show is not just about news. It's about connecting the system. And with that being said, let's get straight into it because we start with the story that could drive everything else, being the collapse of the US and Iran talks, and why this could trigger the next big move in global markets. So let's start with the first story. So the ceasefire is definitely falling apart. Talks happen in Pakistan. It was supposed to turn the ceasefire into something permanent, but instead, after 21 hours of negotiations, no deal was reached. So we have the U.S. Vice President J.D. Vance left and flew back to the U.S. with him empty-handed. And the reason is very clear, which is the nuclear issue. The US demand Iran completely stop uranium enrichment, shut down its facilities, and hand over its stockpile. Iran, of course, said no. Even Donald Trump confirmed that himself. He said most things were agreed, but the only things that matter, which is nuclear, was not. Within hours, Donald Trump made a major move. He announced a naval blockade of the Strait of Hormuz, effective immediately. That means the US forces will now stop and check any ships trying to pass through one of the most important oil routes in the world. So here's the details. So here's the map. Right here is Iran charging the toll. But US is trying to enter this realm as well. So US will be charging right here, literally just right next to the strait, somewhere near the strait. So any ship that has paid Iran a toll will no longer be allowed safe passage. At the same time, the US also said it will begin clearing mines in the strait. So this is no longer just talk. This is active military pressure. So Iran, of course, respond almost instantly. The ILGC warned that any military ships entering the area will face severe force. So now you have both sides increasing pressure at the exact same time. And that's why this situation is very dangerous. So if we zoom out for a sec, the Strait of Hormuz is one of the most important oil routes in the world. So we're talking about around 20% of global oil supply pass through this really narrow channel. So if anything disrupt this route, oil price would move immediately. And that's exactly what markets are watching right now. So here's a simple way to understand what's happening. Right now, the strait is turning into two control zones. Like on one side, if we go back to the map, we have Iran. They have mines, they have missiles, and they have fast boats. They can threaten any ship passing through this really narrow waterway. And reports suggest they are even charging ships to pass safely. On the other side, we have the United States over here. So the US naval is now checking ships in international waters and targeting vessels that have paid Iran. So in simple terms, you now have two sides trying to control the same route basically, and that is creating more uncertainty in the market. We are already seeing the impact. So if we go back to the oil prices are rising again. So we dropped to in terms of Brent crude oil, we dropped to $95 per barrel briefly. So that was the announcement when we had the ceasefire. But of course, because the talk failed in Pakistan, right now we're sitting at $101 per barrel. So it has been very a huge volatility indeed. So if we just go back to before all of this happened, or maybe like just the beginning of this year, so in 2026, we're just like hovering around at $60 per barrel, and then at one point we reached over $110 per barrel. This is one of the biggest moves in decades we're talking about. Then prices dropped during the ceasefire. Now with tensions rising again, we could see another surge. Gold, however, okay, so there's a narrative like whenever during volatile time like this, safe haven asset like gold should be performing in a very stable way. But like if we hop onto the chart, so if we go to past month performance, gold is actually down 6.9%. So like it went up fast during the conflict, but it has pulled back quite significantly as the situation keeps changing. So point being, even this so-called safe haven asset are not being very stable right now. Okay, to be fair, like if we look at this performance from 23rd of March, like gold has been recovering a little bit, but it doesn't look like a safe haven asset the way we expected to perform. And crypto is, of course, reacting very instantly because it's 24/7. Like Bitcoin was pushing higher, close to breaking $75,000. But right after the talks collapsed, Bitcoin dropped from around 73K to right now hovering around 71K. That tells you something very important. Crypto is no longer separate from global events. It's reacting in real time, just like stocks and oil. Now, here's the key risk. The current ceasefire, it was supposed to expire on 22nd of April. And right now, there are no new talks scheduled. So we are heading toward a headline with no clear solution. So the bottom line is talks have collapsed. The US is now blocking one of the most important oil routes in the world. Iran is warning of military response, and markets from oil to Bitcoin are already reacting. So this is not just a political story. This is becoming a global market story, and what happened next could drive the next big move in markets. All right, so let's shift gears a little bit, and I do want to focus on another big matter, another big global shift, and I feel like it's not getting enough attention in the market. So Europe is losing its position as some global leader in pharmaceuticals. For decades, Europe was the center of drug research and innovation, but right now, that power is slowly moving away. And it's being squeezed from both sides, I would say. On one side, we have Donald Trump, so the US. On the other side, we also have China. So let's break it down in a simple kind of way. So 30 years ago, Europe was actually leading the world in drug research. Almost half of the global R&D was done in Europe. So today, the numbers, just take a look here. Let's actually zoom out a little bit because it's an interactive chart. So in 1990, like the darker blue color is Europe, is sitting at 49%. But if we zoom to current days, to 2025, it actually dropped to just around 26%. But on the other hand, US rose from 33% back in 1990, and right now, US is sitting at 55%. So, like, in other words, Europe is losing in almost every single race compared to China and compared to US. Like, we're gonna get into China right now, actually. So China is catching up fast. In fact, Chinese biotech has grown so significantly, so quickly, that it now makes up nearly 1/3 of the global drug pipeline. That is a massive shift. And there are two main reasons why this happened. First, okay, for Europe, why it is no longer the preferred location for R&D investment. First reason is actually US policy. The US is becoming more aggressive when it comes to drug pricing and trade. Donald Trump recently pushed new tariffs on drugs, so up to 100% in some cases. And at the same time, there's new pricing rule. It's called most favored nation. That means the US wants to pay the lowest price that any country pays for a drug. So if a drug is cheaper in Europe, the US wants the same low price. Now, think about this from a company's point of view. If they launch a drug in Europe at a lower price, that could force them to lower prices in the US too. And the US is their most profitable market. So what are the companies doing? Like, they are, of course, delaying or even skipping launches in Europe and focusing more on the US instead. While this is happening, China is also moving really fast. So China is becoming a global biotech hub. We are talking about more funding than Europe, more research, more innovation. So 10 years ago, China made up just 4% of new drug development, but today it's close to 1/3. That tells you how fast things are changing. Now, let's also talk about investment. Because in Europe, biotech companies receive actually much less funding, sometimes 5 to 10 times less than in the US. And Europe is also very complex. Like, there are many different rules across countries, different pricing systems, different approval process. So instead of one clear, very clean market, we have smaller systems, and that slows everything down. And this is showing real impact as well. Like, some of the biggest pharma companies. So if we go to the chart right here, we have AstraZeneca, so this is one of the biggest one, and then another one we have Merck. Those two really big companies have paused or even reduced investment in the UK, even though the UK has top universities like Oxford and Cambridge. So this is not about talent. This is about the entire system. So if we step back and look at the bigger picture, this is not just a Europe story. This is about where innovation is moving, where new drugs are created, where capital flows, and where the next medical breakthroughs come from. If Europe keeps losing ground, the global balance of power in healthcare shifts. Now, to be fair, like Europe is trying to fix this problem, like they have new policies being discussed, maybe like faster approvals, more funding, better support for biotech companies. Some countries like Spain are already improving the systems, and the EU is pushing new laws to make things easier. So there are signs of progress. But the bottom line is like Europe was once the global leader in pharmaceuticals, now is losing ground to US and China. US policy are pushing companies to focus on profits. China is attracting innovation and investment, and Europe is kind of stuck in the middle, trying to catch up. So this is not just about healthcare. This is about global competition and who will lead to the future of science and also medicine. All right, so we'll take a short break from here. When we come back, we're diving into the world of AI because there is some new model, a latest LM model from DeepSeek we could look forward to. And there are some really promising features that I really want to spend some time to dive into details because it's affecting our day-to-day life. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So now let's actually talk about AI, because a major new model is about to launch, and it's called DeepSeek V4. And this is not just a random upgrade. This could be one of the biggest challenges to Western AI companies we have seen so far. So what is DeepSeek V4? You could ask, so let's break it down simply. So V4 is a new flagship AI model. It is actually expected to have actually scroll down to the key takeaway. So we actually have around 1 trillion parameters. That puts in the same league as models from companies like OpenAI and Anthropic. But here's what makes it different. It is designed to be much cheaper and much more efficient. Like first, it can handle very long context. So we actually have 1 million token context windows. So what does that mean? Like that means it can read and understand extremely long documents in one go. Think entire books, think long reports, and even full code bases. Second is the multi-modal. That means it can work with text or images or video and audio all together, not as add-ons, but built in from the start. Third, it uses a smart system called MOE. This means the model does not use all of its power at once. It only activates a small part when needed, so it saves costs and runs much faster. Now, this is where things get very interesting because DeepSeek V4 is expected to be 10 to 50 times cheaper than top Western models. Yes, like we're talking about like up to 50 times cheaper. So if performance is similar, that's a huge problem for competitors. Until now, the AI race has been, I would say, led by US companies, but DeepSeek is changing the game. Instead of just building bigger models, they are building cheaper and more efficient models, and that matters a lot because in AI, cost is everything. Now, here's the deeper story. This is not just about software. This is also about hardware and geopolitics because the US has restricted advanced chips from companies like NVIDIA. So DeepSeek actually had to adapt to it. Instead of relying fully on NVIDIA, they are now prioritizing for Chinese chips like Huawei's AI chips. And reports say these chips are now becoming very competitive. So this is a major shift from relying on US tech to building a local AI ecosystem. This is not just a tech story. This is a global competition story. So US still leads in AI models. China is really catching up fast with lower costs and new hardware, and both sides are building their own systems. So here another very surprising part. So DeepSeek is actually open source, like maybe open source, so let's put it that way. And it may even run on consumer hardware. For example, high-end GPUs like RTX cards. That means developers and companies can run a very powerful AI locally without relying on big tech platforms. Now, we need to be very careful here. Most of the performance data is still internal. It has not been fully tested by independent groups yet, so we don't know for sure it can beat top models. Timing wise, the launch has been delayed for a few times actually, but right now it's expected to release later this month. So we are very close. The bottom line is DeepSeek V4 could be a major turning point in AI, like we're talking about. So let's go back to the list again. 1 trillion parameters. We also have much lower costs, possibly open source and built on a new hardware system. If it delivers what it promises, this could reshape how AI is built, how it's priced and used around the world. And that's why everyone is watching this launch very closely. And I have that marked on my calendar. So end of April. All right, so let's also dive into another topic of AI because, like, for the past few years, the AI story has been very simple. So we need more GPUs because GPUs being more AI power. That was the logical thinking. But now in 2026, that story is starting to change because GPUs are still very important, but they are no longer the only thing that matters. Now, another part of the system is becoming a major bottleneck. It happened to be CPU. So let's put it simply. A GPU is really great at doing heavy math, but AI does not run on GPU alone. It runs on a full system, and that system still needs the CPU to manage tasks, to move data, call tools, handle memory, and keep everything running smoothly. So even if you have enough GPUs, if the CPU cannot keep up, the whole system slows down. That means expensive GPUs could end up just like idle and sitting around doing nothing and waiting. That is why the story matters, because Google has just signed a multi-year deal with Intel to deploy Intel Axion chips across global AI data centers. That tells you something very important. The biggest AI companies now see CPU performance as a real problem. This is no longer a side issue. This is becoming a core part of AI infrastructure. So here's the part many people are missing. While everyone was focused on GPU shortages, a CPU squeeze has quietly been building in the background. So server CPU prices reportedly rose about 30% in late 2025. That is a very big move for a mature market like CPUs, right? AMD also said demand has been much stronger than expected. Some CPU delivery times have stretched from weeks to now months, in some cases, even 6 months. So now we have a very strange situation. Some AI labs may have enough GPUs, but not enough top level CPUs to run the full system properly. A big reason is actually supply. So factories like TSMC are under heavy pressure, and because GPUs bring in more profit, more factory capacity is going to GPU orders. That leaves fewer resources for CPUs, and once again, AI demand is pulling the whole chip market very tight. So here's the deeper issue, like deeper reason CPUs are becoming more powerful. AI is changing really fast. So in the past, a chatbot mostly answered questions. That was very simple. Like the GPU did most of the hard work. But now we're moving into agentic AI. So AI agents. Agents are doing a lot more. So they could call APIs. They could search the web. They can read files, write code, access databases, and connect many steps all together for you. And a lot of that work happens on the CPU side. So the GPU may do the thinking, so-called the thinking, but the CPU helps turn that thinking into action. So some researchers now say that agentic AI system, for agentic AI system, CPU side work can make up 50% to over 90% of that total delay. And of course, that is a huge number. In some cases, the GPU is already ready for the next task, but the CPU is still busy waiting for tools, data, or memory. So this is not just about raw chip power, it's about system balance. And there's another problem too. AI models are handling much larger context windows. I mean, we just covered the latest DeepSeek V4, right? So not just 100,000 tokens anymore. Now we're talking about 1 million tokens and more. That creates huge memory pressure. And some of that memory load has to move off the GPU into CPU memory. So that's why we're focusing what we're focusing here. So now the CPU is doing even more. We're talking about managing memory. We're talking about handling data movement, helping support what the GPU can no longer hold alone. That makes CPU memory speed, bandwidth, and all the CPU and GPU connection much more important than before. Now, let's look at who benefits from this shift. Intel sees this as a big chance to have a stronger comeback than ever before. It still leads the server CPU market, and now is working closely with companies like Google. So actually, we have an official post by Intel on Twitter. AMD is also benefiting in a big way. Its data center business has been growing fast, and the CEO Lisa Su has directly linked the growth to the rise of AI agents. And then there's NVIDIA. So its approach is very different. Like NVIDIA is not trying to win on the CPU size alone. It wants tighter CPU and GPU teamwork. That is why it focuses so much on high-speed links between its CPUs and its GPUs. Because in AI, the goal is not just having the most chips. It's about like making all the chips working together very smoothly. And here's another sign that this trend is really real. Elon Musk has reportedly asked Intel to help design custom chips for his Texas Terafab project. That project is meant to support XAI, it's meant to support SpaceX, and of course Tesla. So this shows the CPU race is no longer just about traditional servers. It's becoming part of a much bigger AI ecosystem. Now, if we take a step back, and look at what this really matters, what this really means. Like for years, the AI race was about who could control, who could get more GPUs. Now, the race is becoming more complex. It is about full system design, like who has the right CPUs, who has the right memory, who has the right chip links, and who can remove the next bottleneck first. And that is a new game we haven't really witnessed here. Bottom line is GPUs are still very crucial, but in the AI agent era, CPUs are also becoming just as important, I would say, because AI is no longer like only about generating answers. It's about taking that action, pushing that button on your behalf, and action means scheduling, memory, tool use, and coordination. And that is the CPU work. So the next big winner in AI may not just be the company with the most GPUs. It may be the company that builds the best full system around them. And that's exactly why CPUs are now back in the spotlight. All right, so now I do want to shift gears a little bit, and I do want to dive into some stablecoin laws here in Hong Kong locally. So let's talk about this because there is a major moment for crypto regulation in Asia. Hong Kong has now moved its stablecoin system into a real operating phase. The Hong Kong Monetary Authority, so Hong Kong MA, has officially granted its first stablecoin issuer licenses to HSBC and Anchor Point Financial, which is a joint venture backed by Standard Chartered Hong Kong, HKT, and Animoca Brands. The license actually took effect on 10th of April this year. So after all that talk, all the planning, and all the waiting around, this is finally real. So we take a look at the chart here. The first licenses actually went to HSBC. I know you guys can't read it, so that's why I'm translating, okay? So the first license went to HSBC. The second one went to Anchor Point Financial. And that second one, so the top one over here, that is the very interesting one because Anchor Point brings together three different strengths. It is a major bank for compliance, it's a telecom player for payment access, and Animoca for Web3 reach. So this is not just a crypto company trying to issue a token. This is a very carefully built structure. So now here's the key message from all of this. So Hong Kong is actually opening the door to stablecoins, but it is not like handing control to crypto native players first. Instead, the first keys actually went to firms with deep traditional finance roots and strong regulatory trust. And that matters because it shows Hong Kong wants innovation, but only inside a very controlled manner and a controlled framework. However, this is where the market may feel a little disappointed. Like a lot of people hoped Hong Kong would use stablecoin as a way to push native Web3 projects into the financial mainstream. But that is not what happened in round one. So, of course, like, yes, Web3 is still part of the story, especially through Animoca's role in Anchor Point. But the real power is still sitting with banks and regulated financial infrastructure. So the message from Hong Kong is quite clear. Like Hong Kong welcomes Web3, but when it comes to issuing money-like products, trust still comes first. And this matters because stablecoins are not just another crypto product. they are becoming a payment tool and potentially the base layer for tokenized finance. So whoever controls stablecoin issuance, it could be controlling a big part of the future financial system. And that is why this first batch of licenses matters so much. If we take a step back, Hong Kong is not just talking the move fast and fix later crypto path. It's actually doing the opposite. It's bringing stablecoins into the same world as regulated finance. So that means reserve rules. We have like custody rules, trust structures, redemption rules, and full supervision. The Hong Kong MA has said its regime is based on the same activity, same risk, same regulation, and is designed to support innovation while protecting financial stability in users. So what does that mean in simple terms? So Hong Kong is treating stablecoins less like experimental crypto and more like a very serious financial product. And you could be asking like the second one that got the license, so Anchor Point. So what is this company? So let's look at this more closely. Its plan is not to issue another tradable token. It wants to build a regulated Hong Kong dollar stablecoin for real financial use. So that will include cross-border payments, that will include institution settlement and tokenized real-world assets. So this is I would say, bigger than retail trading. This is about building payment rails for the next stage of digital finance. And for HSBC, on the other hand, like it could be it could actually have a very different advantage because if it plugs stablecoins into its existing retail and banking apps, then boom, like it already has customer base, it has trust and distribution. That means Hong Kong's first stablecoin race may not be a head-to-head battle. One side could focus more on consumer payments, the other could focus more on institutions and cross-border flow. Now, here's the deeper point. Like the real question is not about like who can issue a stablecoin. The bigger question is who will actually use it because licensing is just only step one. Success depends on adoption. So we are talking about a stable coin at the end of the day, right? Like because will merchants actually use it? Will exchanges list it? Will wallets support it? And will users change the habit? Because locally we use like fiat dollars on a day-to-day basis. We have octopus cards. So this is a real test for Hong Kong stablecoin. So even if a Hong Kong stablecoin, it is right now fully regulated, that does not mean people will switch overnight. To win this battle, like these new stablecoins need real use cases. They need strong distribution and they need low friction. Otherwise, like there might be licenses out there, of course, but not widely used. So what to watch next, I would say. So Hong Kong MA has made clear that future licensing will stay open but very cautious, and the number of licenses is likely to remain limited. It's not giving a timetable for the next batch. So the next thing to watch is not just who applies next, it's whether these first two players can prove real demand. Because if adoption is weak, Hong Kong stablecoins push may look very strong on paper, but very small in practice because like no one locally here use Hong Kong stablecoin anyways. So bottom line is Hong Kong has officially launched a stablecoin era. Of course, like we know that on paper, but the first winners are not pure Web3 players. They are institutions with deep banking ties, strong compliance, and trusted infrastructure. So yes, Hong Kong is opening door to digital finance, but for now, the first people holding the keys, they are still traditional finance. So let's see how it goes. All right, so we'll take a short break from here. When we come back, we are diving into the crypto world and also into Bitcoin as well. Because like some analysts happen to believe Bitcoin could surge to 88K very soon. However, I'm not convinced yet. So if you're intrigued to know my analysis, do stick around after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. Right now, let's talk about Bitcoin, our beloved Bitcoin, because right now the market is getting more bullish yet again, and some analysts are calling for a move toward 88,000, even with war risk still in the background. But here's the key question. Is this the start of a real breakout or just another short-term bounce? So let's take a look at what the bulls are saying. I'm not being biased, so let's start with the bullish case. So there are a few strong signals, undeniably speaking. So first, we have institutional buying, of course, like MicroStrategy is still buying a lot. So if we actually scroll down, so how much MicroStrategy bought? So MicroStrategy, like being the world's largest publicly listed Bitcoin holder, said it purchased 330 million worth of Bitcoin just literally last week. And STLC, which is one of the financial products from MicroStrategy, is also doing really well, and they have a sustainable yield. I believe right now still 11.5%. So speaking of this, you can actually earn that directly in Bitcoin on Roxum Exchange, and I actually covered that I think 2 weeks ago, a few weeks ago on Roxum on Roxum TV as well. Like if you're intrigued to check that out. So that is one bullish signal because like they are undeniably speaking, there's consistent buying pressure from institutions. Like at the same time, Bitcoin ETF, like in the US, are still seeing some strong inflows, like around $787 million just 1 week, and nearly $2 billion flowing in over the past month. So the message is clear. Big money is still entering the market, no doubt. We're also seeing strength in related stocks. So Bitcoin mining companies are rising, stocks are recovering. Even AI stocks like Nvidia are moving higher again. So overall, it feels like the risk appetite is improving slightly a little bit. And there's another narrative that people find it really bullish is being the Clarity Act, of course. So here, Clarity Act. All right, so Clarity Act in the US, it could bring basically clarity, like a clearer rules for crypto. If that passes, it could reduce uncertainty and bring more institutional money in. Now, let me give you the other side of the argument, like why I'm not really convinced it is a breakout yet. First, macro risk, yeah, is still very high. Like we spent the last 1 hour talking about geopolitics. We saw US and Iran talks collapse. Tensions are rising again. Like oil prices is going up. I don't know if you checked. So oil prices is sitting at $102 per barrel, and that feeds into inflation. If inflation goes higher, the Fed may stay aggressive, or even it might hike rate yet again. I don't know what the Fed is going to do. But point being, this is not a good environment for Bitcoin. We saw, okay, second thing is that, okay, we saw this very clearly, like right after the news, after the failed peace talk. So let's go back to the Bitcoin chart. And here we are on the daily candle. So right after the talk, the peace talk fails, the JD funds actually flew back to the US. So when it failed, Bitcoin dropped from 73K down to 70K. So somewhere hovering around that. So despite all the bullish flows, Bitcoin is still moving with global risk sentiment. So that's why we are adding so much geopolitical news here on Roxanne TV, because like everything connects to one another. So in order to come up with a more comprehensive analysis, we have to look at different factors, not just like Bitcoin locally, not a crypto natively, I would say. So from a technical point of view, like this could be a short-term bounce, like not a final bottom, because in most cycles, markets don't bottom cleanly. They usually go through multiple moves, like up and down. We have shake out before the real trend begins. And based on my own analysis, my own view, like we haven't seen the cycle bottom just yet. Speaking of which, let's actually spend some time to dive into charts. So Bitcoin, as I mentioned, sitting at 70.8K right now. So I have been calling this a kangaroo market. So this is, of course, a bear flag. Looks like this is another bear flag. And the reason why it's a kangaroo market, because we just like bouncing inside this range to consolidate a little bit. Of course, we jump up and down, almost like a kangaroo. So that's why I call it kangaroo. But if we zoom out, like looks like we're going nowhere, because it looks like it's just another bear flag. And of course, the name suggests it is a bearish pattern. So we are going down. But undeniably speaking, there are some bullish things I'm seeing from this chart. So first is that wait, what's going on? So first is that like if we hop onto the hour side, the daily hour side, we're actually holding above the support trend. So whenever we come closer, there's actually strong demand. So strong buy orders hopping into the market. So strong volume coming in whenever the hour side come even close. So on the daily hour side, we're actually still hovering around. So we're still holding the support nicely and looks like in a very controlled manner. And if we look at the bear flag pattern, okay, like this is actually not as bullish. This is, I would say, moderate, but it just like shows you we are, okay, first of all, I drew this pattern last month, actually, or 2 months ago, somewhere around that. So a few weeks ago, and it's still playing out. So what does that tell us? That means we are just consolidating in this tight range. So when I say tight, if we take the bottom, so the bottom of the bear flag to the top of the bear flag, it's like 15%. So if you are a really good trader, a day trader or swing trader, then there are some profits being made like inside this tight range. Because point being, for trading wise, whether the market goes up or down, you should still be able to pull profit from it, not just like going up. So however, if you are investor, like more with a long-term mindset, then just like ignore everything what I said, because you'll be able to get more sleep at night. So trading wise, this is what you could do. But anyways, like zooming out, low side is just another bear flag forming before we lose that level of support completely and going to lower places. And same goes with the daily hour side. So this is one. And also like another thing, this rectangle I drew months ago, yet again, like whenever we go to like these level, we haven't even touched, okay, first of all, we haven't even touched these levels. And then, yeah, I don't know why people are having so much hopium. Like 77K to 80K, this is a huge resistance I'm watching, because this is more like a free trading area. Like zooming out, there isn't much data. We didn't spend much time trading inside this region, so there is not a lot of like data for us to fall back on. So So this is why I'm watching. We haven't even get close. Like when we are on the edge, then we will talk like on the edge of that the top of that bear flag. All right, so that is one. If we hop onto the weekly, okay, weekly, there is some bullish sign that I just spotted. And I mean, I'm being fair here. I'm not being a perma bear. So that's why I need to talk about some good stuff and the bad stuff that I saw. So, okay. So for the weekly, we have this like what I've done here from 6th of October till right now. I've drawn a trend line. And of course, this is a downtrend. And for the weekly, we're actually getting to the edge of that downtrend. So point being, this is a critical moment that I'm watching. Like if this weekly candle, so actually right here, if this weekly candle managed to close above this downtrend, then maybe I'm going to adjust my my analysis. But point being, this is where I'm watching very closely. Let's see how this weekly candle going to perform. Today is just Monday, so this is literally just a new print. So I'm paying very close attention this week. And another bullish sign that I witnessed is that for the hour side, weekly hour side, if we do the trend line from the top to whenever we go to the top, we happen to get rejected. So we rejected once, twice, third time, but here we actually breaking out of that resistance. So this is of course a bullish signal that I spotted, and we another good thing is that we managed to close above this downtrend for a few weekly candles. So that is another really bullish signal that I'm seeing. So I'm going to watch this because this is like intercession that I just put out. So again, for the weekly, I'm watching this region very closely because this is around like 69k to 770 something k, so 72k, somewhere around this. So this is the region I'm watching on the weekly we're talking about. So this is the rectangle that I drawn. The reason why is because like whenever we've been trading below this region, like back and forth for 245 days. So point being, like more than half a year, we're trading below this region. So this is forming a huge resistance, and of course, like prior resistance is going to be our support right now. So I'm very intrigued to see if we manage to turn this level, because like everything is aligned right now. We are on the edge of that, of possibly breaking that weekly downtrend. We are also on the edge of this like region that I drawn. I'm eyeing this support and resistance level very closely because like, okay, we have the momentum. Like right now, we are breaking out the weekly candle. What I want to see is whether Bitcoin has the strength of holding above this. If so, I'm going to adjust my analysis. But right now, I'm still not seeing any strength in terms of like the weekly candle. So like if we, another thing that I spotted that I really want to share with you guys is that for the weekly RSI, if we zoom all the way out to the Bitcoin's history, okay, so like whenever we get close to 30 on the weekly RSI, okay, that would mark the bottom of the weekly RSI. But however, if we actually zoom closer, like marking the bottom on the weekly RSI, because like it usually it signals, okay, bottom is near. But when I say near, like when that happened, that was back in June 2020, we didn't see the cycle bottom like until 154 days later. So I would say the bottom is near, but like it's definitely not I would say the ultimate bottom. Like this does not happen like in every cycle, but like it happened back in 2015 as well. So January 2015. So here we mark the bottom, the cycle bottom on the weekly hour side. But as you can see, like the actual cycle bottom on the price action, it did not happen until August of 2015. So that means we have to wait another 270 days. So that was in a previous cycle in 2015. So this is like, point being, okay, we have marked it could be the cycle cycle bottom on the weekly hour side, but it's not being reflected on, it doesn't justify on the price action of the actual Bitcoin charts as well. So that is another thing I spotted. And another, so for the monthly, so we're building up that time frame, building up that analysis from weekly, actually from daily to weekly, now to monthly. Okay, so to monthly, what I've done here on the hour side is almost like a channel. So like this would mark the bottom. So when we drop low enough on the monthly hour side channel, so here we had the bottom, here we had another bottom, and so as like here. So that was 3 occasions already, and it happened to be like a almost exact same bottom, same pattern, I would say. So if we zoom closer to the current stage, we haven't even get into the channel yet. So we have to go low enough to get into the channel, spend a little bit of time here, and then we bounce back up from there. So if we follow the exact pattern at any previous cycle, so we have 3 data points here. So if we repeating for the 4th time, then possibly, okay, I'm still eyeing October 2026. It could be the cycle bottom. And then by then, yeah, I'm going to get into the Bitcoin market more aggressively. At least this is what my analysis has been telling me. All right, so like for the bullish case to really work, I'll say like a few things still need to happen. First, we need a very stable geopolitics, no major oil shock, and the Fed staying flexible. If any of that breaks, then the upside case becomes much weaker. So the bottom line is like, okay, of course, the data looks bullish, like ETF inflows are looking rather strong, big players are buying, supply is thin above current levels, but at the same time, macro risk is also rising, geopolitics is very unstable, and Bitcoin is still reacting to it. For me, this is not a clear breakout yet. This is still a market in transition, and until we see stronger confirmation, I'm very cautious for the next few months. So let me know actually in the comments if you agree or disagree with my analysis. All right, so let's shift gears from Bitcoin to crypto right now. I do want to dive into DeFi, specifically speaking, one of the biggest crypto project out there. So Aave is facing some very serious internal crisis. So Aave is no doubt the blue chip leader in DeFi, in crypto lending, and is now dealing with something much more dangerous than just a hack. It is not a bug, it is not an exploit, but a breakdown in trust inside its own ecosystem. So over the past few weeks, key service providers have started leaving Aave. And it's not just one team. We're talking about multiple core partners. They are walking away from Aave. So the first one we have to talk about is Chaos Lab. So the main risk management provider announced that they are stepping away. And then the second one we have is BGD Lab. So it's being one of the main technical teams behind Aave v3 also exited. So, and even ACI, a key governance group, is planning to leave soon. So this is not a small issue. This is a full ecosystem shakeup. Now, let's break it down very simply. Like Aave works like a system with different parts. You have teams building the tech, you have teams managing risk, and teams helping with governance. Now, imagine all of that part start leaving at the same time. And that's what's happening right now. At the center of this conflict, there's one big issue, which is control. Like there are growing concerns, growing tensions between Aave Labs and the core team and external contributors. Some team are saying like decisions are being too centralized, the influence is being reduced, and the direction of the protocol is changing too fast. On the other side, Aave Labs wants to move faster to build new products and push for the next version. So we're talking about Aave version 4. This is where things get more technical. So actually, I'm going to keep it simple. So Aave V4 is a major upgrade. It is designed to improve its efficiency and scale, but some risk experts are worried. They say the new design could increase risk and make the system harder to manage. For example, Chaos Labs warned that the new structure could actually amplify risk, not reduce it. And at the same time, they were also in a dispute over fees and control. So this is not just technical, this is also business and governance. Now, here's the key concern. Aave used to have strong risk control. For years, it avoided major debt, but now its main risk partner has left, and only one major provider is stepping in to replace them. That creates potential single point of failure, which is of course very dangerous for DeFi. And there's another issue. We're talking about governance. Aave was known as decentralized system, different groups balancing each other, but now critics say power is becoming more concentrated. So large token holders may have more control over decisions. So instead of decentralized governance, it may start looking more like a centralized system. Now, if we step back and talk about this, like if you are a user, you care about three things. If the system is safe, it is stable, and can you trust it? Right now, the three questions are basically are being challenged, not because of an attack, but because of internal changes. Now, there are two ways to look at this. The blue are saying like this is just a transition. Aave is evolving, becoming more efficient, and preparing for the next stage of growth. But the bear are saying this like this could weaken the system. Is loss of experience, loss of trust, and higher risk during market stress. And in DeFi, trust is indeed everything. Like the bigger picture, this is not just Aave. This is about the entire DAO structure, the DAO model, because this situation highlights a key problem. Can decentralized systems really scale without becoming more centralized? As protocols grow, they need faster decision, they need more control and stronger coordination, but that can come at a cost of decentralization. So the bottom line is like Aave is facing the biggest challenge ever, not from outside, but from within. Like the key teams are leaving, risk management is changing, governance is being questioned. This could be some short-term reset or the start of a deeper issue. But one thing is clear, like even the strongest DeFi protocols are not immune to internal pressure. And right now, Aave is at a very critical turning point. So if we quickly hop onto Aave's price, right now we are doing, I would say the past 3 months performance is down 42%, not looking very good. Well, about 1 month, so 1 month is down another 14%. Past 7 days is also down 0.8%. But like the past 24 hours is up 5.7% and not doing too bad on the past 24 hours. However, okay, so past 3 months, I would say, like to be fair, the entire crypto market is not doing too well. So I'm not directly pointing finger at Aave why the token's doing so poorly because, well, guess what? The entire crypto market is doing really poorly. So This is one. So the entire market cap is like losing, basically losing quite a lot of market cap, a lot of liquidity. And liquidity goes to somewhere safer elsewhere because there is a narrative that crypto is not going to come back. So people are not paying much attention to crypto right now. And I could really tell because I'm managing different social media platforms and the engagement is down. And I noticed like crypto, it doesn't intrigue a lot of people as it was, especially in bull market. I mean, that is understandable. So that is one. Another second, I'll say second reason is like DeFi. It's not doing so well right now. Like, of course, we're not in a DeFi summer. It could be in a DeFi winter. Like people are not spending much time learning about all these different protocols or even utilizing DeFi. Because like I've met people in crypto for, even they've been in crypto for quite a few years, but they have never touched DeFi at any point of their life. And right now we're in a bear market, so the sentiment is going low. So this is I'll say, but like this is a real challenge for RV if we manage to bounce back from here. And yeah, let me know if any of the viewers out there are holder of RV, how you view this news. Are you still positive about the team, or are still like sitting on the fence and waiting for some more news and some more confirmation for the token? All right, so that would close the show of today. And before you go, make sure to give us a follow on Roxham TV and on Twitter. So basically, so my personal Twitter is jamjamcrypto_IO. Make sure to give me a follow here on Twitter. Make sure to follow Roxham TV on Twitter as well. So it's really easy. The username is Roxham TV. And there are really valuable content coming out on hourly basis, not just about Bitcoin, but also about global news, about AI and geopolitics. So make sure to give us a follow and turn on that notification bell. So as for my show, I'm live here Monday through Friday, 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry. The recorded version is also available on both channels, so being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching. Make sure you like, subscribe, and see you guys in tomorrow's show.